All right, welcome to today's session. Today we will be looking at multiple time frame analysis. Let me find out. Yeah, okay, got it. Okay, multiple time frame analysis. All right, so there's something I believe. I don't believe that trading has to be complex, or has to do with so much indicators all around, and then, but some very simple strategies like waiting for USD JPY or waiting for your trade or the market to get to a level whereby I call it the high probability trading strategy. You see the level of confidence that I was using to share that update that I am buying up USD JPY at this point and I'm selling Euro USD. That's because, please, everyone should mute. That's because I've been able to see the level at which Euro USD had gotten to on a higher time frame and known that there is a higher probability, which means the probability of a turnaround is 80 over 100. All right? 80 over 100. That, okay, this thing will turn around from here. It's 80 over 100. So multiple time frame analysis helps you to see from top to bottom. Okay? I call it it can also be called the top to bottom approach. All right, which means like the way you see things when you are up in the sky, when you are in the plane now, you will see, everywhere, you will see it in a more broader way. But the deep informations, the deep details about how the house look like and all that, you might not see it. But the good thing is that you will see how, you will have a broader view of everything. So when the plane is now about to land, the more it is coming closer to the ground, the more you are now seeing details of how the building around that view it looks like, and more clear and all that. That is the strategy that we're going to deploy using multiple time frame analysis. Okay, from top to bottom approach. So now that we want to analyze Euro USD, first I go to the monthly time frame. Good. So when I go to the monthly time frame, okay, when I go to the monthly time frame, I come here. Now, why did I know that Euro USD was going to sell? Because Euro USD had gotten to a sell zone. All right, a sell zone. Now, this sell zone is a resistance zone. Okay, so if you look at it from here now, you will see that this level is a sell zone. This zone is a sell zone. All right, it's a level whereby price are actually struggled, okay, to break out downward. What do I mean? Let me use this. So price came from here, came here, price rallied here, price could not break down further, price rallied here and went back up, came down again to test that same region, went back up. All right, now price now finally broke through. Okay, now there's something I want you to observe, that price had created first footprint here. Okay, price had created second footprint here. Okay, but the third move, price broke through it. Now, it will not just be easy for price to just come so easily and break out of this level again. Never. There will be some resistance on this level. Why? Because people at this level have already marked this level as a level to sell off after this successful breakout came up in this place. All right. So let me delete all this, but I'm sure you get what I'm saying now. So having been able okay, good. Having been able to break out from that level now, it's very difficult, not so easy to break back into that level. All right. So, and also when you are looking at it from this other view, I'm coming. I want to show you something now. When you are looking at it from this view, you will discover that on the monthly time frame, this is a descending triangle that was being created. Do you get that now? This is a descending triangle on the monthly time frame. So what does a descending triangle signals? All right. A descending triangle is a chart pattern. Okay. Let me get this stuff. A descending triangle is a chart pattern that signals reversal. I get me now. So market has been going up in this direction. When a descending triangle appears, okay, when price starts descending, it's just giving one signal that what price is going to sell off. Okay, that price is going to sell off. All right. So if you now look at it, the key thing that you need to take note of, if you want to write this down, write it down. The thing that you need to take note of is that your signal is more stronger when you see it from the higher time frame. When you spot it on the higher time frame, it is more solid than when you see it on the lower time frame. So which means what you see on the monthly time frame signals more information, signals a broader information, signals a long-term information than what you see on the daily time frame. What you see on the daily time frame signals stronger information than what you see on the 15-minute time frame. So you have to leverage on this multiple time frame analysis to come from the broader scope to the more clearer scope. But you cannot neglect the broader scope and focus on the clearer scope and say the broader scope is not necessary. No, they are both together. So now, this is what price is expected to do. Looking at this monthly time frame and seeing this descending triangle on a monthly time frame, you know, this is what it expected to. So now that we have seen that on the monthly time frame now, USD signals a bear movement. Okay, let's now go to the other time frame, which is the 1 week time frame, to still see what is being said. All right, does it truly signals that, or are we already having a different thing in view? All right, so now you can see that on the weekly time frame now, we are having too many informations. Okay, now another thing you should note is that what you see on the last few candles, let me make it more contextual for you. What you see from this side, okay, is more important than what you see from this side. Okay? What you see in the most recent movement in price is more important than what has happened in the past. All right? But what has happened in the past can be used to predict what is happening, what is going to happen in the future. All right? But the current information, because all these candlesticks are communication, they are communicating, they are telling you what you and I are doing in the market. As you are selling and I'm selling, we are contributing to the sell pressure. As we are buying and you are buying, you are contributing to the buy pressure. It now depends on who is selling more. Is the seller dumping more or the buyer is buying more? So when you look at it now, we want to focus on this information here rather than just paying attention to this place. Don't forget, we've already established from the monthly time frame that the general monthly time frame is having what? A descending triangle. So we now come here. Let's focus on this information now, because it is very important for us. So when you now look at this, the weekly time frame, it is still very significant than the daily time frame. But when you look at the weekly time frame, you will discover that the weekly time frame is communicating differently what is happening than what we are seeing. Because now we have now decided to go closer to observe. Okay, we have now decided to go closer to observe what is really happening. Now let's see. I'm seeing something here. Good. Can you see this? Now, what can you see here? This is a triangle. All right. This triangle, it has told us about price movement in the past few weeks. Don't forget, this is a weekly time frame. So which means all informations here, all candlesticks here are formed in the last few weeks. Okay? So, because if you look at it now, in fact, this is 2022. So January started here. Look at where January started. This is where January started. Let us mark it. Let me get this thing so that this will give us like a foresight into what we are talking about. Okay, this is where January started. January started here. Can you see it? This is the candlestick. Let me make it red and then a bit thicker. Okay, good. So January started here. So this information is also very important for us. So which means January started with euro gaining momentum than the dollars. Because if you want to look at it now, even when the dollars draw down a bit and pulled down here, you will discover that, hey, sorry, this is what I want to move, this box. Okay, good. You will discover that even this market did not close below the previous one. Okay, this market did not close below the previous one. Look at where the previous one closed. Let me drag it out so that we can see it. Okay, good. Look at where let me duplicate this. Now, look at where the previous one closed. Can you see it? So, which means the previous close is lower than the current close. This is what we call higher high. Because now, this close is higher than this close. Look at where this one closed there. Look at where this one closed now. I'm talking about where they were pullbacks. All right. It closed higher than the previous close. This is higher high. So the market has been forming higher high since the beginning of the year. Okay. Now, when we now got to this level now, look at the big candle that broke out this resistance zone. Okay. This is what we call breakout candle. All right, this is a breakout candle. Let me bolden it. This is a breakout candle. Okay, so This breakout candle now has broken out of this resistance zone. All right. Now, one important thing that I've always taught, anybody on my session is that whenever there is a breakout, okay, note this. Whenever there is a breakout, there is 80% chances of a pullback. Whenever there is a breakout, there is 80% chances of a pullback. And if you followed my sessions, you will discover that I've always said that markets will pull back either 30% or 50% of the previous candle. Okay, and the previous candle is always the breakout candle, and the breakout candle is always a full-bodied candle. Look at it now, a full-bodied candle, very mature candle, has broken out of this resistance zone. And what happened now? Last week was the pullback that we all enjoyed in trading while we sell it off. All right. The question now is this: what would next week look like? What would next week look like? Now, what next week will look like based on this, based on what we can see. Because when you are trading, you don't trade based on what you think. You don't trade based on what you feel. You don't trade based on revelation that you saw. You trade based on logic, what you can see. Now, the question is this: what can we see? We can equally see that market has broken out of this resistance level. A 50% to 30%, a 30% to 50% pullback has been done. There is just one thing markets can do. All right? There are two things market can do, because, of course, there are 80% chances the market would pump out up. There are 80% chances that next week, this is what we are going to see. We are going to see, yes, this is what we are going to see. I don't know why it's not changing. Yes, we're going to see this. That's what we're going to see. That's what we are going to see, most likely. So we're going to see, most likely. Most likely. Like 80% chances are that market goes up next week. 80% chances are that market goes up next week. All right? And also, the 30% chance is this: market goes down, okay? Goes down, all right? And comes back up, creating a massive wick to the downside and goes back up like this. That's if this resistance hold. But I am telling you, this resistance would most likely hold. Why? Here is why. If you look at this, see the rejections that came in here. Okay? When market went up, see the rejections that came in here. This is one footprint. See the rejection that came in here. Another footprint. And here, market successfully break out. Now, do you now think it will be easy for market to get back in here? No. Why? Because as you are thinking, as we are analyzing, other institutional traders are also analyzing. They are also looking at the market. Even robots have been programmed to recognize breakout and what to do next. All right. So, because this breakout is happening on a weekly time frame, there is higher chance that this is not a fake breakout. Okay, they are fake breakouts. Okay, but they are very, when they happen on a higher time frame, they are always very significant. All right, they are always very, very significant, and we shouldn't joke with them. We shouldn't joke with them. We shouldn't joke with them. Okay, now look at this kind of breakouts. Look at this kind of breakout. Market broke out from here. All right, and what do you see happen there? Market went up. I'm going to show you different types of breakout and what we should expect. Look at how market broke out from this uptrend. Broke out from here. Okay? Look at how market broke out. Yeah. Okay? Look at how market broke out from this level and look at the downpour. All right? So you cannot underestimate the power of breakout. So you get, you cannot underestimate the power of breakout. Look at this level too. Look at this. This is like the reverse being the case. Look at how market broke out from here. Where is this thing now? Okay. Okay. Look at how market broke out from here. Look at how market broke out from here. Market broke out from here, and what do you see? A massive downpour. All right. So for E-Link now, that is very busy. Imagine you just buy and leave it. Even if it's 0.01, if you move in 1 week, that 0.01 can give you $100. I'm telling you. Look at a breakout here. So don't joke with breakouts. Very, very significant on higher time frame. Look at this one. Market has been constantly going down. A breakout happened here. Okay. A breakout happened here. What do you see market does? Market went up, came down, went up, and what do you see? Market pumped up. All right. So look at this now. Good. Look at this now. Look at another breakout from here. All right. Look at another breakout from here. When market, you see that we have similar occurrence here. Market went up, okay, came down, came and rallied there, touched there, came down, touched there again, came down, and market finally broke out. Now look at what I'm saying. That what we might see next week is this. Look at here now. Market broke out with this candle. Week 1, market went down, went back up, market went down, went back up, but finally pumped up. All right. So with this few point of mine, you know, that is what we should expect. That is what we should expect. That is what we should expect. Look at what someone did here. This is like a similar case. We had a market move up, market came down. Look at this pumping, candle came and pumped here, and look at what happened here. Now, equally look at what happened here. So when you go back and backtest breakout candles, you know, from levels like that, look at this one. Breakout candles from levels like that. This is weekly time frame, giving you a very strong buy signal. All right. You can also go back, do your own analysis, you know, and see the market for yourself. All right. The session will end now, but we can join in with the link immediately. All right. So that we just touch other aspects of our analysis and then we move. So back to this place now. We've seen what this breakout happens. We've seen the 80% to 30 to 50% pullback. So this is what I'm expecting next week. All right, this is what I'm expecting next week. So we've seen a breakout, a pullback. What next is a move to the upside. All right, but that move to the upside would not happen without a fight or a challenge from the sellers. All right, because definitely sellers will still want to keep selling. Okay, but of course, this breakout candle has made a big statement. Okay, so let's go deeper and into more clearer zones. When I mean that, that's back to us understanding and using multiple time frame analysis to our advantage. All right. So here we've seen a breakout, a pullback. What are we expecting? A further pumping price. So yes, let's go closer and more clearer into the daily time frame. Now, good. So this is it. This is it. Can you see now? Can you see now? This is now very, very interesting. Because one of the reasons why I called it a short on the Euro USD was because of this pump that came in last week. All right. That's last 2 weeks. Okay. This pump came in and I knew that there will definitely be a reversal. All right. There are 80% chances. So there are times whereby as this breakout happens like this, price will just keep going up, just keep going up, just keep going up. All right. But there are always 80% chances of a pullback. All right. And I feel there is nothing like a missed trade. Okay. Because there is always opportunity in the market. Let those opportunities create themselves. So we have gotten into a clearer zone now, which is the daily time frame. A breakout has occurred here. Okay. A pullback definitely happened. All right. Now, what is the expectation? The market would go up. All right. The market will go up. That is, that is the expectation. All right. That is what we can see from what the market has done in the past. Okay. So our expectation now is that price target is up. All right. So what will I be doing on Monday by 8 o'clock a.m. Nigerian time? I would start buying. I will set my buy limit here. Because of course, market might want to flex itself down to this level. All right. My buy limit is set. And when the buy triggers and gets to more than half, I buy again. Okay. And when it gets here and breaks out of this zone, it will definitely come back to test this zone. I will buy again when it comes back to the test this zone. All right. And then I watch the week go like this. Now, what I'm saying now are all probability. Okay. But the probability is high probability. Okay. You cannot have 100% hold of the market as an analyst. But what you can do as an analyst is to forecast based on what you can see, not what you can feel. Okay. And be able to come up with high probability trading strategy. My own high probability trading strategy that has worked for me is what I'm talking about. I don't know about others. Okay. So this is what I see the market doing. Set my buy limit here. Market comes in. Market might want to test, go down a bit, come down a bit and all that. Of course, there's another resistance zone here. All right. But like I told you, this might end up becoming a week, okay, where a fully bodied candle starts from there Okay, I buy at this zone again. It goes up, breakout, goes outside this zone. All right. Definitely when you go outside this zone, it will want to just rest a bit. All right, because price moves in wave-like format. You might want to rest a bit, and then we see it keep going up from here. All right. So by next week, Euro USD has a higher probability of going buy. And what I'll be doing next week is buying. I'm taking a buy position on Euro USD. Any question? If you have any question, just raise up your hand. You don't need to unmute so that I can just see you and call you so that, because we are recording this session and we want it to be orderly. So if you have any question, you can just raise your hand. There's an icon that you use to raise your hand, and you drop it in the chat that you have a question. So that is what I will be doing. Okay. All right, Sam, you can go ahead.
Okay, Apostle of Finance, please, let's move to the monthly time frame again, please.
Okay.
Okay, no, it's monthly. Oh, okay. Please, sorry. I'm sorry. Let's take it back to the weekly. I think it's the weekly. It's the weekly. Okay, good. Now my question now is on this weekly time frame. Before market gets to this previous higher highs, this 1, 2, 3, before it gets to the last higher high, it is forming something like a trend line. I don't know if you can place a trend line on top of the weeks.
This place?
Yes, something like there's a trend line.
Yeah. Is that
Okay.
what you mean?
Yes, please. Yes.
Okay.
Can you hear me draw it properly?
What?
Can you hear me draw it properly? Okay. Yes, it's okay like this. Okay. So now, Apostle of Finance, my question now is now looking at this trend line, consisting considering that the market has been touching that trend line and market has been reversing, coming for a retracement. So now, considering that trend line as as something like a threshold now, and whenever market touches that trend line, it is always giving us a sell signal. A sell signal. It has occurred once, twice, and is occurring the third time again. So now, looking at that, and we already know we have a resistance zone on the monthly time frame. Good. So now looking at that, are we not considering that to that whenever market touches that trend line, we are having a sell order down to the next resistance zone. So now looking at that trend line, someone might want to place a sell, then thinking that market will come down to the. Can you hear me please on that trend line on the second lower highs? Yeah. Yes. Okay, now, so now looking at that, someone as a trader can also say, okay, looking at this trend line, I want to place my sell here. That's already given me the confirmation. So I'm selling down to the next lower trend line. So now
Okay.
my question now is that looking at the two analysis, considering yours and this now, and considering the high probability trades now, which one do you think is more visible now? Because now I'm kind of confused. I don't know
Yeah,
if you understand my question.
yeah,
That's my question.
like your question is valid. All right. So here is it. It's a question of what level is the current price? What market structure is the current price? Okay. So it's not like maybe the chart will always follow the trend line pattern forever. Are you getting me now? The question of what is the current market structure? All right. The current market structure is that there is a breakout at a resistance zone. Do you get it? That's the current market structure, that there is a breakout at a resistance zone. Do you also know that there was a breakout on this level? Let me draw the trend line for you to see. Now, do you also see that there was a breakout out of this channel as well?
Yes.
All right. So you would have thought that if price got here, what would you have thought? That it should go down, right?
Sell.
Yes.
Yeah.
But what do you think price did?
Yeah.
Do you get it now? Now, this means the market direction has changed away from this trend line. Okay. And now it has tilted upward. Why? Because it wants to, it's the momentum is building like a wave-like pattern upward. So you get. So when you see that kind of pattern, that's why we spot out a ascending triangle. All right, there. And not only that, we now saw a breakout at a support level, sorry, a resistance level. Now, that already gives us another impression to now dig deep, so that we don't only base our what is it called? Our conclusion on the fact that, oh, this is what we saw on the weekly time frame. That's why we're doing a multiple time frame analysis. Because going by what we saw on the monthly time frame, we will be selling. That's what this is telling us. Do you get? Because it's currently at this level now.
Okay.
But going by what we now see on the weekly time frame, that there is a breakout into this level, and going by what we now see on the daily time frame, that there was a breakout and a pullback. All right. So that's why I said the lower time frame now begins to give us more clearer picture of what is currently happening in the market. I don't know if that is clear. So when you compare multiple time frames and you don't just use one time frame to do a standalone analysis, when you compare multiple time frames, that would now give you a clearer view of what the market might do next. And of course, what you said might just be correct. Do you understand? So that is why it is not an absolute knowledge. I get me now. It is not an absolute analysis to say market is going in this direction and it just goes there. Do you understand? But what I'm talking about here is 80% higher probability trading strategy. That there is a higher probability that because price has broken out at a resistance zone and there is now a 30% to 50% pullback, price will definitely move up from here. And another trader can see it as, oh, price in this trend line, and then price might want to touch this trend line before then moving up. Do you understand? So that is it. But
Yes.
what I'll be trading for next week is what I've explained here. I don't know if that's clear.
Okay. Yes, yes, very clear, very clear, very clear.
Yes. Any other question? Okay. Any other question? So the thing is, don't fall in love with a particular direction of the market. You know, it's sweet when you say, the thing is just falling, it's just falling. And then you begin to just think in one way that, oh, this thing is supposed to just be falling, or this thing is supposed to just be rising, without thinking, without fact checking to know if it can also turn the other way around. So let's just do a quick one on USD JPY. Okay. So you can see that of USD JPY. Let's do from 1 monthly time frame. So USD JPY is more like an overdue buy. You know, USD JPY is more like an overdue buy. Because if you even look at it, you know, for a long time, USD JPY has been at this level since it looks like USD JPY is back at a level that it got to in 1998. It's not, it looks like that is it. It even crossed that level in 2022. And in 2023 now, is going back to that level. All right. So if you are looking to catch up on USD JPY, this should be your take profit level. Because definitely when it gets here, it might pour down. It might pour down. The thing is this, I'll talk about this more properly, but let me just hint on it. When you look at a trade, if I traded during this time, I would have also short this market. Now, why would I have short this market? This is the reason. Euro US and USD had gotten to a level whereby when you count 12 months apart, you will not see any price that has gotten to that level before. Okay, 12 months apart, see this place empty, no price has gotten to that level. So when market gets to a fresh and new level, an all-time high, just expect a downpour. It is very, very, very possible that it's going to happen. So you get, just expect a downpour. So USD JPY now is having its good time already. Look at the bullish movement of last month. Then look at the current level at which price is currently. So let's look at it from the weekly time frame to make more better decision. Now, good. This is giving us another insight. We've now seen that when price got, it reversed. Okay? And now, price now went back up. Now, it's quite dicey at this point because, number one, USD JPY, it has at a very critical level, at a very critical zone. This is a critical zone because this is the same zone that sellers are lurking around. Like they are here, they have their orders here. See, you get. Now, if sellers are lurking around this place now, and there are now more buyers, definitely price will go up. But I see a lot of rally just within this place. I just see within the daily time frame and the hourly time frame, I see price rallying here for a while. I see price rallying here for a while within this range for a while. All right. So now it's not just easy to say, oh, price will jump up now on this weekly time frame. It's not easy, it's more easy and likely to say price will fall. All right. It's not easy to say price will jump up because what we can see clearly that in the past 2 weeks, okay, sell pressure was more. Look at how many candle it takes for the bull guys to pull down to this level, and look at just what it takes for bears to move. You understand? So next week might have us going up, creating a wick to the upside, okay, and then going down again. That is just what I think would most likely happen next week. So, but let's go down to the lower time frame to see for ourselves daily. Good. This is giving us another picture. Hey, next week is very interesting. This is giving us another picture. All right. And the picture is giving us is this. There is bullish momentum coming in. All right. Why do I say so? This level here is a support level. As you can see, it's on a daily time frame, so it is still very significant on a support level. Now, look at the candlestick pattern. Look at this. This is a doji. When you spot a doji at either a resistance or a support level, it means continuation, a reversal, and a continuation in that reversal. Look at this now. Because there has been a consistent fall in price, we have a bullish doji candle here. The bullish doji candle signaling a buy when you see it at a support level. When you see it at a resistance level, it's signaling a sell. Okay, so look at what we saw here and look at the market currently moving up. All right, so that's why I said it is quite, still, let me say, quite unclear what market direction would take next week. But definitely on Monday, we might see a little, on Monday morning, Asian market opens, we might see a little pullback, okay? And then coming to this level to touch this level. Or a little pullback and then come down to this level to touch this level. So I would just say all in all, when you are trading USD JPY, you would need risk management so that you are more safer. Okay, let's look at the 4 hours chart. Okay, good. It's more clearer now. Okay, good. So look at what we have here. It's more similar to what happened here. Okay. So you can see how price rallied within a particular level. And look at what it did here and then moved. Okay. So most likely next week, all right, this USD JPY would move to this level. Now, I see a lot of sell pressure here. A lot of sell pressure. All right? A lot of sell pressure. There is a lot of sell pressure here. Why is it not... Okay. Good. Yeah, I see a lot of sell pressure here. So price would most likely go up. All right? Get into this place and sell off. That would be what would most likely happen. Any question? Let me know if you have any question in the chat box. Any question? Okay. In the absence of no, okay, someone wants to ask a question. Okay, go ahead, Sam. Go ahead, Sam.
Okay, sir. Sir, my question was based on the dodgy candle you said earlier. Most times there are a lot of times whereby on the charts, markets will form a dodgy and market wants to reverse. Or lo and behold, times whereby few of the times I do just place trade on that concerning that, and most of the times I get into profits, and few of the times I go into losses, whereby I only put that thing in consideration on a support level or a resistance level. I don't know, but the mistake is that maybe price will eat me out and then now continue back in that level again. So my question is that what confirmation will I should we expect more before placing a trade, using that doji as a on the support level or resistance level? That's my question.
You mean of USD right? So the confirmation you can get is if
Yes, yes, yes.
yes, the confirmation you can get is if you can wait for price to get to a clear zone. Now, where price is currently now is not a clear zone. Oh. Okay, price has to either get to a clear zone like a resistance zone, or a zone where it had to break out from. Here you get. So, and you're able to catch in on like the upward momentum. Here you understand. So you might want to wait to see what price does when it gets here. There is no harm in waiting. It's not imagine you waited now and then you are able to come in the market with a high probability trading strategy and you're able to use risk management with maximizing your lot size and still make a huge win. Yes, that is what actually matters. So you might want to wait on this. You see, on Euro USD now, we had a clear movement. But on USD JPY, you have to either wait to see what price it will do, or you want to buy and put your stop loss maybe a little after this candlestick, okay? Or you want to sell and put your stop loss here. So those are the two things you can do. So you get. So either of those that you can do, either you are buying or you are selling.
Thank you.
Yeah, but if you want to sell, wait for price to get into this level and see the reaction. If price is going to jump outside it, don't forget that even outside this zone, outside this zone, it's already like, into where a level where it had never got into in a long time. So that's it. I'm glad that you all joined in, and I'm sure you have learned one or two things. So that is very, very vital. Yeah. So thank you very much for joining, and see you in next week.